Good morning, everybody. Happy Thursday. Welcome back. Daily Profit Plan. Let's get started. Options looking pretty good. Markets looking pretty good. Futures flows returning to green. 0-day gamma looking to green. 7,000's lighting back up across the board. It's very possible that we have a nice little reflexive rally off of the little 1.5% sell-off, 1.4% sell-off, and things looking pretty good. Couple reasons. So Taiwan Semiconductors beat earnings by like 35%, and that's given a nice little boost to everything. Take a look here. Just took a screenshot this morning. Let me share the screen before I talk about it. So here you go. Let's get the chat up here for everybody. Chat's open for everyone, so feel free to leave comments to have a nice engaging chat this morning. Hey, look at this. Jeff, what's happening? Chuck, good morning. Dr. Barnes, good morning. David, good morning. Michelle, seeing my telegram. All right. Greg, good morning. Alan, good morning. Andy, Tony, good morning. Good morning. Good morning. Okay. All right. We're going to see how many more one traders I get in here. One trade, one trade, one trade. That was a little key word. Make sure, look, if you want to talk to everyone in the chat, make sure you send the message to everyone, not just hosts and panelists. That way we can all see each other's comments. Cool. There we go. Jeff's got the one in there. Alex got the one. Arthur got the one. Perfect. One trade, says James. All right. Apparently I've got people that see my telegram. That's good. All right. We'll get into that in just a second. So what they're referring to is this one trade mastery. I said, you want a free course? I'll give it to you. It's like a 60 to 70 minute video. I stumbled upon this, did this like over a year ago, but I was finishing up my education content for engineered options, and just had this playing in the background just to see, like, let me make sure, because what I did was I build out a lot of content, and this was kind of like a lead gen front end, like let people find me out there, put it on social, put it in my newsletter. And anyway, so I have like a 60 to 70 minute video plus a PDF. And so I'll share the video link today if you want to check it out. I think it's just good trust content. I mean, it was designed for exactly that. If you can get good, I know that's terrible grammar, but basically if you can master one trade, you'll be fine. Like, trading does not have to be complicated. If you can do one thing really, really well and really, straightforward and really consistent in the markets, you can find a way to make a lot of money. So, this concept was, I go to one of the famous Bruce Lee quotes, which is, I fear not the man that's done, 10,000 kicks once. I fear the man that's done one kick 10,000 times. Right. So doing one trade, whether it's a bullish trade or a bearish trade or whatever it is. So this is another just kind of great session that just shares really strong education. Anyone that's pretty new to trading, pretty new to options, wrap your head around one trade, right? Wrap your head around one debit spread, right? Wrap your head around one credit spread, wrap your head around just trading the market directional, up or down. And when you have a chart that you like, when you have a setup that you like, you have one trade that you can work it in, and you can do it literally thousands and thousands of times. And it tends to go pretty well, especially in a market that does have an historical bias to go up, right? Okay. So got a lot of one traders out there. Let's let the room fill up a little bit more. Blake, will you let me know if we peak up to like 200 plus today? Just send a message in the chat, whether it's Slack or our Zoom. I'll start getting it out there for everyone, because I want as many people as possible to see it. I threw it in Telegram, and what I can do is also, since I have like 2,400 followers in Telegram, I'll just throw the link out there as well. Cool. All right. So Larry says, I just subscribed to Waterfall. When you discuss that, can you advise how to start? Larry, yep, you're in great hands. Also, we did a Waterfall class last week. So my recommendation to start on Waterfall income is to jump into the last masterclass. Excuse me, the last masterclass we did in Waterfall income, which I believe was last week. Okay, so that's a great place to start. Get your strategy 1, strategy 2 discussions and masterclass, and then what we've done so far in the live trades. I have 4 trades right now, 4 trades for Waterfall income that are still valid. You're welcome to take those trades. They're still in my tracker. So if you're comfortable following along those trades, I'm going after. I'm risking risking 4 to make 1. But in all of those trades, I also have a potential $10 profit trap or $1,000 profit trap. So if we do get them kind of perfectly positioned, we could make $1,100, only risking $400. So those are all 4 trades that are all pending for waterfall income right now. Okay. All right, Zach, appreciate that. Vladi says wanted to watch the one trade video. Link is broken. Is it? I don't. Where did I post the link? Where's Larry at? LDM, where you at? Did you get that link? I sent you an email. Did that work? It should just be like a public. It's a unlocked Vimeo link that I can send. So let me know if that works. Let's see here. George saying, really love to enter your options. Do you have a sheet describing your other plans? I do. Yep. So we'll talk one trade mastery in a little bit. I'll come back to that. These are other current trades and services. So practical options, the secret is out. Now with engineered options, I'm giving my full course away, which is a $500 bonus course. I'll even add in here one trade mastery, full session, and I'll find the link for that. And this is, again, foundational education. Look, I take pride in my education, and I think that it's very important as a student journey or member journey that you have some really strong prerequisites and really strong foundational education to make sure that you are getting started with trading alert services or signals or education on the right foot. None of my strategies are rocket science. None of the ways that I trade is something that you're not capable of doing. When I first started trading options, the only reason I did it was for a necessary play, which was, hey, I just sat through the great financial crisis and watched our portfolio go down by like 30 to 40%. So how can we prevent that from happening? So I looked into, protecting our portfolio. And what did we learn? Buying puts and selling calls. Okay. Protecting the portfolio, generating income. If you own stock, you can sell covered calls and either pull in income or get it called away for credit, lower your cost basis. Obviously, buying puts is for protection in the event the market's going to go down 50% like it did in 2008. So that obviously caught a lot of investors off guard. And, I was fairly new to trading, and I'd been in the markets for 7-8 years by that time. And I was starting to cut my teeth with professionals in the Forex world. But it was helpful. Like by the time it rolled into like 2009, 2010, actually protecting a group portfolio with a little investment club that I was running at the time with some, we had like 15 members, and we got together every month and just tried to pick our favorite stocks and what was trending and what we liked and what we screened for. And we had, 20 plus years participation in the markets, and we survived a lot of things, but, we still had some winners and losers. Anyway, point is, like, that's how I started dabbling with options. And then a couple years in, I realized that, okay, options is more sophisticated than just buying puts and selling calls. Options, you can actually create like this variety of trades where you can express something in the market. And coming from, somebody that was getting really serious about trading currencies and actually picking directions and trades, and I realized you can trade the market up, down, or sideways. You start looking at building out some of these, crazy strategies, and it's just a matter of like making a calculated bet. Do I think the market's going to go up? Do I think the market's going to go down? Do I think the market's going to go sideways? Do I have a price time volatility play that I could put into the markets and express it through options? So that was my journey, and it's continued to evolve. And I'm never ignoring like a new strategy. I mean, if I've got something creative in options, like I'm certainly game. One very good book that if I've got some diehard people that are willing to learn is, look, check out my foundational education. Let me see if this link will work. It should. Let me go video, copy link, and I will share this link right here. So let's go link. There. So full session. And so it's an hour and 13 minutes, and it's just a 73-minute session, but it's a great watch. So I'll post that link in just a little bit. But for somebody asking about other services, you want to trade with me every day? You want to trade with me on a Monday at 11:30 every week? We've got a trade posted for newsbreakers this week on Microsoft. Double ups, we had a trade. I don't think we did a double up this week because it's been just crazy busy on engineered options, but we had a nice winner last week. We had a perfect pin last week, actually, for like 1,000% gain on double ups, which is my favorite. We closed out for 200% on partial, and then had the rest run into close, which is over 1,000% a return on risk, which is freaking awesome. Pinch point, we had a winner yesterday. That's a scanner. That's a volatility dashboard, giving us some nice directional plays. We had an automatic winner take profit yesterday on OKTA. Engineered options is the new service that I am. I've got a master class today. I'm really excited about it. There is so much to show and teach. Our trades are looking great today. We got filled yesterday at a nice, hopefully 1-to-1. And if we get some flows into the 7,000 handle, we should be looking pretty good for a full winner this week. I've been very active in the Telegram since we have some new memberships. And yesterday, let me see what I posted here in Telegram. So in Telegram for engineered options, right here. Thursday Friday would be important to see if 7,000 is still a flow target for the S&P. 1.4% pullback from the recent all-time highs with a 116 monthly expiration ahead of our engineered options expiration, which is out to Tuesday the 20th for a potential weekend and holiday love. Obviously, I'd like to see if the market can get to 7,000 plus into this week. I do not want to see over the holiday weekend the market's going to start, crumbling over the weekend and see what futures does Sunday night. So we will discuss, we'll see what profits are looking like by Friday. If we're up like 80, 85, 90% of our max profit, I might just take the profit. We'll bank a winner. We'll talk about everything through the masterclass today. I'm doing a bonus class on Monday as well. Markets are closed. I will be teaching. So that way we have no distractions, and we can also get our numbers prepped for Tuesday's trading as well, right? So engineered options macro dashboard, we had a nice 1 hour bounce. Here's my chart. So a nice 1 hour bounce on the 144. We're bouncing off that 50 period moving average on the 4 hour time frame, and then a nice wick to the south, which means that if we're going to do a gap fill, especially, a nice little pullback here, then the buy pressure starts to come back in and bid this candle back up. And if today we're going to be filling that gap, that's an encouraging sign, and filling that gap and also trying to, maybe squeeze out a new high towards that 700 handle on XSP, or obviously the 7,000 handle on SPX. So futures up like 0.4+% this morning, and continuing to look even better, 0.5%. So we're going to get a big fat gap to the upside, which means we're probably going to see some positive gamma today. And that puts us up to around 69.60, which is nearly an entire gap fill. So now the question is, if we fill that gap, get into positive gamma, are we going to hit 75 to 90 today? Hopefully that's the case. And by Thursday, Friday, hopefully we're going to see, maybe a plus minus 25 or 30. And probabilistically, it's enough movement to the upside to keep us from getting price to come back to like 35 or 30. And we will get a nice fat profit by, Friday and protect like most of our profit. Or if we want to let it roll into the weekend, more time passes, and we could probably close it, opening bell Tuesday for most of our profit, or let it run till Tuesday close if you want. All will be discussed today in Engineered Options Masterclass. Okay. Let's see here. Stacy, what's that link? Where'd you get that link? Hey, you got it. How'd you get that link, Stacy? Did I give that to you? I just don't remember posting a One Trade Mastery anywhere. It does work. I mean, it works on my end. Is it working for everybody? Okay. Yeah, there's a link in the doc that works. Got it. So let me know if that link. So Stacy shared it. That's the link. Apparently she hacked into my Vimeo. I'm just kidding. I don't know. No, that works. So I save that link, and it's also that way people are asking for education stuff. I mean, foundational education, One Trade Mastery, foundational education, practical options. This is now included with engineered options. If you purchase engineered options, I will include One Trade Mastery, and I'll include practical options. Practical options is a $500 course that I'll include. If you are a lifetime member of my other services, I've included practical options as well. So either way, I want you to have it. It's just, are you in my engineered options? Are you in my other services, a lifetime member? But I want you to have that kind of prerequisite education, right? I don't know how many others have, foundational education within their course catalog, but I do. I think it's really important that, I know I have a lot of services here. I know I talk a lot of different strategies, and I'm bouncing around in these daily profit plan services because I can, and that's my job. And I'm trying to find some trades as well as service all these things. But to get there, it's like, that's why I want to build, a strong foundation. Let's understand that it can start with one trade, right? And then it can go out to, okay, well, I like the idea of trading the markets bullish and bearish, or trading the markets up, down, or sideways. Then we sprinkle in a few more strategies, right? And then you want to start applying these strategies to the markets. Now you start picking services that allow you to do that. Okay. All right. Masterclass Monday. Yes. So let me take this in Larry says, I accidentally took your engineered SPX for tomorrow instead of Tuesday. Honestly, it probably looks great. What'd you get filled for, Larry, by the way? Did you get filled for $2 or more than $2 for the SPX trade? Actually, I mean, part of me kind of likes the Friday expiration because I think going into that option expiration cycle, it's probably looking a little bit better just to have that thing closed out by Friday. So we'll see. All right, good, good, good. Yep. Hey, Stacey, sorry about that. I'm a guy. Yep, I know. I played basketball with some Stacy's back in the day. All right, please share the link again. Stacy, you want to do me a favor and post that link for everybody? Since how'd you get it, by the way? Where'd that come from? I shared it for a couple of students that asked about it because I mentioned it in my daily profit plan last week or the week before. Okay, thanks. Nice, Roger. Got 210 on SPX trade. Excellent. Yesterday, that was probably trading for like 255 to 260 near the lows of the day. I know XSP was trading for as much as 60 cents from what I saw. Yeah, there you go. Jeff says I got filled at 250. Got 220, says William. Good. Good. Yeah, I mean, that's good. So we will spot check that on Friday and see if we can pull in. You know, if you got filled for, I got filled for $2. Okay. So if a $2 fill for me, if I'm getting 80% of that $2, if I'm up 150 to 160 bucks, I might just take the profit off and close it early. One thing I'll talk about today in masterclass for engineered options is let's also set some expectations. How many of us think that this market's going to go up without a pullback? Show of hands. Do you think this market goes up without a single pullback for the entire year? Hopefully, of course not, right? Who said Sandra got a $3 fill? Wow, that's good, Sandra. Yeah, so everyone's saying no, of course not. So, we're sitting here just near all-time highs. And to be fair, I mean, the market's probably going to have a poke of the high and then pull back towards this 50-period moving average. Like we will talk, week to week. Like these are really important levels to watch because if the market goes slightly higher here, let's say we get to all-time highs again. This high was 86. Let's say we hit 7,000. My question, of course, is okay, the market's at all-time highs. Now what? Well, the beautiful thing about all-time highs is usually momentum begets momentum. So the market kind of gets this like rest assured the market's going to go higher type thing, and that's great. Okay. But as we hit all-time highs and we look at something like I have this sentiment survey that comes out every week and every Wednesday. This is what I'm not super stoked about. Bullish sentiment is starting to get a little bit on the extreme side. It's leaning quite extreme. This is actually a 1-year bullish high in sentiment. If everyone is crowded to one side of the boat, I tend to get a little bit contrarian. Okay. I'm not saying the market can't go higher, but I do have my reasons for skepticism because over the next like 1 to 3 months, this tends to be like flat or down. As opposed to when it's in like the 30s and all of a sudden it's like, equal weight bullish and bearish, or maybe it's underweight bullish. It just tends to be a better opportunity to kind of, bottom out and buy at a discount. So this is good for momentum. This is good for sentiment. Obviously, we've had like beat down sentiment for all of 2025. But like I said, how many of you think the market's going to go up without a single pullback? Everyone said no. I'm in the same camp. The market's going to go up, yes. But is the market going to have some volatility and pullbacks along the way? Sure. So that means that engineered options will not be perfect. But like I said in my video yesterday for class, this classroom video here, please watch this, 7 minutes long. I gave you an update. Okay. Now, yes, things look good on the dashboard. Things are looking good directionally. We got filled on trades yesterday. You don't have to jump in and start chasing all of a sudden. There's another week to trade. Today, I want to talk about my monthly levels as well. And I have an interesting game plan for the monthlies. My house edge for a monthly chart is way higher. We have monthly charts that are showing green and bullish like 70, almost 70% of the time. And our weekly edge is like 62%. That's just baseline, not with our technicals to go on top of that. So point is, I think that we're going to have some weeks where we trade engineered options where it's going to be, we have a participation level and we want to have some defense, right? And full transparency, when I initially talked about this service to the team and we started, creating everything around it, I wanted to call this income grid. because I was interested in having, 1, 2, and 3 levels kind of running every single week and every single month based on, math and pullbacks, based on percentages. And the reason why is because most of the time the market just keeps grinding higher. But when the market goes like flat to down, it tends to reflexively find its way back up. So I could have either 1, 2, 3 winners. I could win all 3 of those trades, or I could have 1 loser, 1 winner, or I could have 1 loser, 1 winner, 1 winner. And even if the market was down for the week, I tend to still make money, right? So the origin story is I wanted to call this thing income grid. I kind of like the name of that. But to be fair, I didn't get a lot of these trades filled. Anything below like level 1 and 2, or I'm calling them technically in my service, I'm calling them level 0 because we're participating there, and level 1, those are really the 2 trades we focus on a regular basis. And I have a feeling that in 2026, we're probably going to have several zeros and ones get filled because the market might be that type of behavior, which is it's open, it's up a little bit, it's down a little bit, it's up a little bit, it's down a little bit. It finishes the week slightly positive. That's all we need, right? So what we need to discuss today in class is if the market is here and it goes straight up for the week, we need to find our participation levels to get paid the way that we want to get paid. So we're going to have to participate a little bit higher, right? But right now, if the market is going to be choppy and sideways, we can participate right at the open and let the market, just do what it does best, which is, grind. And we have level, I'm calling this level 0, and then level 1 would be a defense trade. Okay. So again, all this in full detail for today's masterclass. Today's masterclass will be 2 p.m. Eastern time. 2 p.m. Eastern time. Okay. Very good. Let's see here. Microsoft entry with you and Lance, a bit concerned here, pretty sizable. We'll see, but also we're getting a bit of you get a pre-earnings move on Microsoft. So we're at 463. Plus or minus through earnings. You have to remember we've got like a 7 to 8% move on earnings. So let's take a 7% move. It's actually, let me check this here. See if this will log me back in. Yep. So 7.24%. That's an average earnings move. So 0.0724 times, we're at 450. We were at 459 yesterday. So I'm looking at about a $33 move, right? So if we go from 459 down $33, that's at 426 or so. That's in my profit trap zone. And if we go from let's say just around to 460, so my math is easier, we go up to 493. Okay, that's inside my profit trap zone. So my profit trap was 495, and it was 420 or 425, and I'm 15 wide. So if we hit those levels and if we get even an outsized move, let's say this goes $34, $35, it's going to be in our profit trap one way or the other. Okay. So, I looked at this technically. I just looked at the volume profile. What stands out to me on Microsoft is either this big liquidity target between like the 425, kind of this 15 to 425 zone, or this bigger liquidity target up here towards like the 495, 500 handle. Okay. And there's still a couple weeks in this trade. I went out to the 30th and earnings on the 28th. So there could be some flows. The reality is this going back up into here, going into earnings. Look, if we're coming into earnings on the 28th and we're seeing profit, I'll still take the profit. My goal is between the 2 trades. I don't necessarily need to hold my trade to like a butterfly trap. If I have net profit on the 2 positions, I'm going to take the profit. That makes sense? Okay. Good question though. Trade. Stacy, you're just bringing all the info. So you got the PDF and the doc and everything. Awesome. Very good. Okay, good stuff. Let me catch up on some comments here. Do you think Meta's on the bottom or not yet? Meta. Well, they're firing people in the reality labs. Let me get back to Microsoft here. I like that for my I like Microsoft here for the volume profile. Meta, I don't like Meta as much. I think it's still a good company. But I don't know if Meta is going to win the AI race. I think Google's probably better positioned for it. Meta is an advertising company. I think they're going to overspend. The thing that makes me a little hesitant of just jumping into all in tech is that, look, in 2022 when we had a deleveraging, Meta was down over 70%. So pullbacks and volatility just make me a little bit nervous, where it's like, this thing dropping or dipping a little bit. It's down, 27%. Um, I don't know. I think that if I'm going to play Meta, like, what's a good level I to own it at? Well, probably back here at like 383. So there's option trades to take advantage of that move versus trying to call the bottom here. I mean, here'd be my short-term technical play. If we came back down to revisit this low and then we base in here and then we break back above, then sure, getting long with some, near-term trades on Meta, getting back to all-time highs, I think is doable. But if Meta pulls back to this level, previous resistance becoming support, that's probably closer to that like 50% correction zone. Yeah, that's 51%. I mean, I do think Meta is a cash cow. I do think they still make a ton of money. Issue is, of course, if they're just spending all of it. So Meta's probably not going to be uttered for me as far as like one of my favorite plays. I think Google is a much better play right now as far as Mag 7 goes. Let's see here. Amazon set to get rid of 30,000. I mean, that's been happening for 3 years now. Every tech company is laying off people. It's been happening since 2022. Now with AI, it's happening even more. They're looking for full automation. Once you start introducing humanoid robots and embodiment of AI, it's like it's coming. Tech is probably going to lead that. That culling of the herd of the job market. But yeah, I mean, it's disruptive. That's for sure. Okay, CLF. Yeah, I like steel. I like aluminum as well. Alcoa's up to 64. I like this trade a lot for 2026. I'm looking at dollar cost averaging Alcoa for aluminum. Copper's obviously off and running. Silver's had a decent pullback, or is looking at a decent pullback finally. We hit my measure move around $91 and it's pulling back. Silver's down about 4% today. This is good. I mean, I don't know if it's just immediately, buy the freaking dip and this thing just keeps going, or if we have just ugly, crazy volatility. Just be careful. I still like any type of reasonable dip. Do I have a fib on here? I should. Let me go to the weekly. Is that right? I mean, I guess I'm just going to take this entire fib and just see if it settles in somewhere. So this low to high, just take this whole fib because it hasn't stopped. So these are just some reasonable pullbacks I think silver will hit. We hit 70 again. We hit 65 again. If we come back to equilibrium, we hit about $55. I think these are still like big picture levels. I'd certainly love the opportunity to buy silver at that type of discount. I just don't know if it's going to go to 115, 120, 130 first before pulling back. But I'm not chasing this rocket ship, and I'm just trying to patiently wait for maybe a pullback. Okay. Let's see here. Omar says get out of the SPX at 125. That was early and that was easy. Okay. No, Sandra, that was I did it yesterday on Closing Playbook and I posted it for my newsbreaker service. It's 2 butterfly spreads. One of them is like an 8.5 to 1 and the other one's like a 10 to 1. And so they're very low risk overall. If Microsoft moves, pre-earnings or into earnings and gets into some of those volume profile traps, then hopefully I can get like a 2 to 1 or 3 to 1 reward to risk and carve out a net profit. 50% profit at the moment. That's good. I'm liking like 75 to 80%. Give it some. I mean, if you want to hang on to it, give it some time. Okay. So where are we at for the day? Let me delete these lines and start from scratch. We got a gap up today, right? So market's all the way up here, 0.5+%. We're going to get into positive gamma today. So let me clear some of these levels out. I will recenter my indicator. So we're back up above. This is crazy. We closed that entire gap from yesterday. And let's see if we can hang there and stay there. Let me recenter this thing, 69.63. That's funny because it's almost where the close was the previous day. What was our open today? Open at 6969. Okay, 6969 plus minus on the day. Log me out. Let me log back in. Give me a second. Okay. Does everyone have that link for One Trade Mastery, by the way? I posted that in Telegram yesterday. Just want to make sure you have it. Stacy's been great about posting that for me. So here's I've got all this other stuff. So I posted this yesterday near the end of the day. Who wants a complimentary One Trade Mastery course? Hopefully 2,400 people do. I found this gem when finishing up my engineered options video series and strategy guide. One Trade Master is a great supplement to finding a great strategy, finding ways to repeat it thousands of times in the market for high quality setups. Join me, which is now today's session, daily profit plan. Type in one trade in the chat, which about 100 of you did. So if you want the link, you want the content, want the 70-minute video, then we can post it. Okay. Cool. So that's just some good trust content for you. Have at it. I will be live with Lance here around 11 o'clock. We're going to play a little engineered option session from Lance and I this morning as well. I do want to look at a couple of trades. I want to look at my daily profit play, see if we can get something lined up for today. So we've had a inefficiency day on Monday, efficient Tuesday, efficient Wednesday, and we had another gap today. Hopefully, let's take a look at some levels here for SPX. We had a little bit of a volatility retreat, which is a good thing. We are in the January 15th expiration, plus or minus 22 I'm seeing this morning. So it's again, that's like really freaking small. It's really quiet, which I don't love. Look at this retreat in the VIX. This is called vol suppression, everybody. This is what's been happening a lot in 2025, and seems like it is a big deal in 2026, where the volatility index goes from like 15 to 17, 15 to 18, and then retreats. So we do have a VIX expiration on the 21st on Wednesday next week. So we will see what happens with this. Maybe this is like a reset in volatility. We hit all-time highs again, and we start from this like 14, 15 handle and work our way back up into options expiration for the VIX, or maybe slightly after that. But we'll see. I mean, it's a nice reset to get a nice big pop today. Seeing the markets higher. S&P is up 0.54%. NASDAQ up almost 9%. Again, Taiwan Semiconductors beat earnings. NVIDIA's up almost 1%. We're getting a big pull in big tech. Dow is up 0.4%. Russell's up 0.44%. VIX is down 6%. These are all encouraging signs. So let's see what we get for the day. Looking decent here. Hopefully we are going to flow to some fresh highs. My gamma on the day, we're trading at 6968. We have the biggest level of the day at 6990. We have some positive and negative gamma at 7,000. I think that's still kind of a sticky point for the week. Let's see if we can hang out and get there. So I want to take a look with only like a plus or minus 22 on the day. Don't like a couple things. Don't come back and fill that freaking gap. Like let's see some positive flows. Let's get to 6990. Let's get to 7,000. Come on, you can do it. 7,000 SPX. Set the chart alarm. Alert saving. All right, let me just delete it here then. So I'll go move this up to 7,000. Okay, now let's have a look at our daily profit play for today. So if I am going to find my deltas, 9 delta is at 7,000. And put delta would be at 69.10. I'm probably not going to get the credit that I want for this trade. Gap fill will be 69.27. Let's see where engineered options is at this morning. So let me, I think I'm just going to, this will be easier to find. So engineered options, SPX, waterfalls. There's one. So I've got $70 out of my $2 there for my engineered option trade. And then an XSP. This one filled. Let me label that. Okay. So that one's up, that one's up, and that one's up. So we're up about 50% of our profit on engineered options, which is fine. I'm going to try to ride that a little bit longer towards like 75 to 80% would be kind of my goal. And maybe if I like the posture, I might just sit on it, look at the probabilities coming into Friday, and let it marinate for the weekend. Did I change the credit to fit? All my XSP trades are filled at 50 cents. VIX expiration is going to be the 21st. Is the VIX? I think it's going to be like a VIX AM expiration on the 21st. Okay. All right, good stuff. So let me try to find a trade for daily profit play. See if we have an efficiency market today. Let's go SPX. And let's see here. 15th. Part of me, I mean, I think 7,000 is gettable. I mean, our VIX of the morning, we're seeing a VIX at 15.65. As long as it doesn't flare back up, let's move this chart alarm down to like a 16.5. If we're going lower on VIX, that's kind of a good thing. Let's go 15 VIX and see if it continues to go down. My alerts aren't saving for some reason. Hopefully, I'm not out of them. I think I get 400 alerts and they might be all filled. All right, let me go back and try to find a trade. So if I did just my standard daily profit play, I think the 7,005. I mean, that's an 11 delta based on current center price. We haven't really done much movement today. So we're literally like dead center. Gamma at 69.90. Could we get to 7,000? Of course, we could move 35 points and hit that plus or minus 22. If we pull back, I mean, positive, negative gamma pivot is at 69.35. So to be seeing some strong support in the market, we really don't want to see price, make an aggressive move back to 69.35. We'd like to kind of see it hang out here around 60 or 50 and see if this is going to take us into, buy the dip and kind of run this thing higher. Okay. We'll see what the day gives us. Part of me, is this a low risk if I did like a iron fly? This might be a little different, but 65, if I went 80 by 50, I'm risking 3 to make. I mean, this is less risk than I get in a typical daily profit play. This might be the play. If we're going to chop around here for the open, this might be the play. We don't really have a ton of news today. If I could pull, $12 credit, I'm risking 3 to make potentially $12. But my goal is not to hold this thing all day. My goal is to maybe pull, 50 to 100 bucks out of this thing. So that's certainly one way to trade it. The other way would be trying to go up towards like these lower deltas. Something like this. I don't know if that's going to fill. That's offering like little to no credit right now. On the put side, I mean, I don't want to see price getting too silly to the downside here. If we go gap fill, so I mean, look at what the market did. So we had a gap here that got filled. Okay, we have a gap here that got filled. Are we going to have a gap here that's going to get filled? I mean, it's possible. Hopefully, that's not the case though. Right? Like, I mean, if we're going to hit 7,000, we really don't want to see a pullback to 69.35. We want to see this thing hold around the open and just kind of keep melting up through the day, hit my bigger gamma levels at 69.75 and 90. I think the better trade, 30. Let's just look at the deltas. Okay. Let's see here. 17 delta, 14 delta. See what like the 30, 20, 05 gives me for the day. This one's not terrible. Let's see. Our low yesterday was 27. Is that right? No, way off. What the hell? 68.86. All right. So if I'm looking at like 35 and 30, I don't think we're going to get there. That one's not terrible. If I get 50, gosh, can I get 50 cents out of this? That's a butterfly spread. That's a broken wing butterfly. If I can get 50 cents, I don't mind the trade. But I'd be risking 450 to make 50. I mean, part of me thinks the better trade today is just do an iron fly. If I do 65 here, let me see what 10 or 15 wide. So 10, 10. That's light risk. That's a little bit more risk. Let me start. I'm going to try to get 12 bucks here. All right, this is for daily profit play. It's a little unique. Let me see if I can get filled for 12. All right, I'm in. This is going to be a different trade than we've taken, but I'm looking for a little bit of chop this morning. See if we can pull a quick profit out of that. I'm only risking $300 to make 12. If we hang out around 60, 65 for the day, we've got a good win. Looking promising. So we'll go daily profit play, DPP new trade. Pay attention to the strikes in this one. This is not a typical trade that we take. 115 expiration. I am selling the 69.65. So selling 6965 call, and then buying the 6980 call. 6965 is the put, and buying the 6950 put. Collected $12 credit, $3 max risk. This is an iron fly. Different play, lower risk, and looking for price to be quiet today around the 6965 area. Look for 50 to a dollar profit to protect. Okay, usually this is good at like a 10% winner. So if I pull in 12 cents and I can pull out like a dollar, great. If it goes from 12 to 11, I'll take the profit. So it's in the daily profit play members area. 69.65 call, 15 wide. 69.65 put, 15 wide. The risk graph looks like this. So at 65, I have my credit up front. And if it goes too far, down on the option chain or up on the option chain, then my risk is this. This is my profit trap. Okay. And then my risk is out here. So I pulled in $12 and I'm risking $3. All right. So what do I need price to do? I need price to stay very, very chill this morning for hopefully 30 to 45 minutes or 60 minutes. I'm not in the trade, obviously, very long if we go to 10 o'clock. We don't have any news at 10 o'clock to my knowledge. If the market's all stoked about like, okay, we had a big gap to the upside and things are just pretty calm, then good. Let's see if we can grab a quick profit out of this thing. So 1, 2, 3, 4. DPP, iron fly. Let me see if I can grab a quick like 50 to $100 out of this thing. Correct. Yeah. 15th expiration, 0 DT. 12:15 mark. Good fill. Great fill. No, Mark. I'm just in one. I'm just in the 50s. I just had multiple accounts filled. That's all for engineered options. Based on your silver video, should we sell our options positions, take profit? I mean, if you want to be long silver, stay long silver. I'm just saying having some type of like sell calls into your silver positions. If you have SLV, sell calls. I mean, the thing's up 90% for the year. Or it's up like 30% for the year, but it's up like 90% since the October dip last year. It's not going to keep doing that. Like I can promise you one thing, a chart is not going to look like that forever. So, I mean, it's been a huge contributor to, having one of my, better risk adjusted return years in 2025. And it's just a lot. I mean, it's behaving like it never has in the past, So that being said, selling calls or having some butterflies, having something that just at least offers some type of profit protection, you can always get back in. But if you want to, I think hedging is really expensive. Take a look at, see if I can find this on, let's look at SLV here. Okay, so SLV at 81 and change. Spot prices XAG USD. I mean, the good thing about silver is that there's so much demand for it that it doesn't matter if silver goes up to like $500 or $1,000 an ounce. I'm not calling those levels, but I'm saying, could we get to 100? Sure. Could we get to 150? Sure. But even if it doubles again from here, it doesn't necessarily change like the race to AI and the industrial need for silver. So It's like this whole demand is like price insensitive. Same thing for copper. So I think that's why these things are going parabolic. My warning is you don't want to be, all in invested on silver when this thing pulls back 20, 30, 40, 50%. So I'm saying be careful, pick your battles, dollar cost average in. A chart that looks like this, parabolic, is going to pull back. I promise you the chart will pull back. I just don't know if it's going to go, here first and then pull back, or if it's going to pull back now because this is a measure move around $91, which is what I technically had. But there are ways to just at least protect a paper position here. There are ways to hedge. I mean, to me on SLV, a hedge would be, is it expensive to do? And again, it's if you're hedging, it's kind of a throwaway trade. I'm not trying to hedge the whole position. I'm just trying to take some asymmetrical risk, where it's like I'd risk, let's say I can risk $100 to $500 to make thousands of dollars. Well, if I put in something like a butterfly spread, maybe like the 65 by 55 by 45, I mean, that seems reasonable, right? Maybe like a 45 to 60-day hedge. Let's just have a look and see what that looks like. So if I go silver, and let's look out about February to, I mean, March is a decent expiration, out 60 days. Okay. So maybe out 60 days, or by the end of the quarter. I don't know. 75 days is fine. The further out you go, I mean, if we hit my butterfly profit trap window, it's not going to be worth a ton of profit, but let's see how cheap it is. So if I go to let's say I buy the 65, okay, and then I sell the 55 with 2 contracts, and then I buy the 45. Okay. So this is a hedge that would cost you $1.32 to make $1,000. So your net would be like $868. Now again, that's like perfect. That's a perfect trade. 868 over 132. It's a 6.5 to 1 hedge. It's not the greatest. It's not the worst, but it's certainly not expensive. As opposed to if you want to buy protection, you're going to spend $1,000 to protect your position on silver right now. Right? You want to buy a put, it's expensive. So if you wanted a decent trade, so if you have zero protection in, one of my favorite protection trades is damn, David, that was good, man. 1275 in the iron fly, great. Well, hopefully we're not seeing a ton of direction, right? We want to see prices just kind of hanging out between 60, 65 this morning if possible. I'm going to go ahead and set a take profit here. I'm up $10. Let me see if I can grab a quick, like, $75 here. So it'd be like 11. We got in for 12. So I get like 11.25. I mean, I pulled in 12. So a 10% profit target would be $1.20. So I should set the debit. This is just being mechanical here. If I put it like 1080, try to get a 10% winner. Okay. I'm just going to set it $11. Try to go after $100 on it. If you can get that thing to give you $100, take the profit. $50 or better, that's fine to protect. I'm going to try to go for $100. Let's go back to silver. Okay. If you have zero protection in silver, one thing you could also do is a collar trade. Okay. So if I went out 75 days, the premiums are pretty decent here. This is SLV. Here's the deal. A collar trade is I sell a call and then I buy a put. And my goal is I need to finance it. So if I sell the $80 call, that's going to cover my position. Now, you don't have to do this for all of your shares. If you own SLV, you can do this for half of them if you want to. But I can do a $80 call for $11.65. And I could also buy an $80 put for $9.70, and I can pull in a net $2. So a collar trade, I actually like this. You could do $80 covered call. So you'd sell the 80 call, and then you'd buy the 80 put, and you still get $2 a premium. So you could lower your cost basis by $2, and for the next 75 days, have full protection to the downside. So if we drop down to $60, this was going to be, this is a 41 delta move. So you'd have this, $80 put option that would be worth, let's say this trades, down to 60. I can tell you roughly what that would be worth. All right. Now the deltas are going to be increasing because this would be getting further into the money if we drop to 60. But right now, give or take, you'd have a $20 move and a 41 delta. You'd basically double your money on the put. You go from like a 965 put to like $17 or $18 on that put. So you could lower your cost basis by $2 and another, let's say $8 or $9, which, you bring your cost basis from 80 down to like 62, 63. That's not a bad play. And that's cheap. You actually get paid to have protection if you do a collar trade. If the price goes to 100, then you're gonna sacrifice the upside. So if it goes to 100, you're capped at 80, which is why I'm saying if you still want to be long silver, don't cover the whole thing, right? Maybe cover half your positions, cover a quarter. I mean, I don't know. I don't know how freaking crazy people are to like, how aggressive are you in silver? I'm looking at like a 5 to 10% allocation in gold and silver each. That's going to be my play. And same thing for Bitcoin. So gold, silver, Bitcoin to me is anywhere between, 15 to 30% allocation in my portfolio. I'm trimming it a little bit because I took a lot of profits the last couple of years, but probably like 15, 20% total between gold, silver, Bitcoin is what I'm trying to build up to. Does that make sense? So any questions on the collar trade? So that's just saying that's the cheapest way to protect, and you're protecting it literally at the money. So you sell the 80 call, you are sacrificing the upside. That's part of the trade-off, but you have full protection below $80. So if we dip from 80 to 70, 80 to 60, you're going to nearly double the profit on your put, which also means that you don't get the stock called away if this is out, 75 days. But on the long put side, remember that because it's a long put, you would probably want to manage this thing at like 30 to 40 days. Probably like more like 30 to 35 days. If you got a long put and it's worth something, anything inside a 30-day window, if we see a dip to 70 or see a dip to 60, we see like one of those like 10% sell-off days or swings, that would be a good spot to maybe grab some of that put profit, because the long side of the trade, the long put, is going to be best served if we have a fast, aggressive move to the downside. Make sense? Any questions on that? So if you have SLV, so just my first instinct would be if I have SLV, which I do, a collar trade is going to be my go-to because I can still pull in credit and I can get immediate at the money protection. Otherwise, it's very cheap to do the butterfly spread like I did. Throw out that like 20 wide net. You're paying $1.30 to make up to like $870. Risk reward wise, if I want to hedge for like $300 to $500, that's fine. But remember, I give that away. Like if that trade doesn't pay me, I sacrifice that. Okay. If this trade goes up, I still get $2. If this trade goes down, I lower my cost basis. So not putting dollars out of my pocket, this one actually helps me pull in an extra $2 and have some immediate protection. You didn't, Kenny. It's there. Stacy can post it. My special admin today is Stacy. He's been posting the link in the spreadsheet. So if you want to do that again, please do, or I can throw it in as well. and Stacy, I got to ask, are you a chef? I see that at Chef Stacy Rocks. Are you a chef? We talking Michelin star? 22 years. Oh man. Where you at? Where you live? Where you based? Where's your restaurant? Anybody lives in Stacy's area, go get some grub. Surprise, Arizona. Nice. That's awesome. All right. Well, if I get out of here to play some golf in the winter, get out of Utah, I would love to come play some golf. I'll retire. Oh, well, that's no fun. We want to have a meal made by Stacy. All right. Okay, cook for fun. Yeah, that's what it should always be. Is that New Year's? Was in Utah for New Year's? Cool. Salt Lake City, St. George. You do some hiking. Go to Zion. Go to Moab. That's a little bit south of me. That's like 4 hours south. I'm just north of Salt Lake City. Thanks, Kay. Appreciate that. If you want to remember this Zoom chat is open for everybody. So if you'd like to send the message to everybody. So Kay just says, I just heard of you and your platform. You seem very knowledgeable and direct. I like your style. I'm excited. Thank you. I am direct. I'll be humble and say, I'm as knowledgeable as whatever you think comes across. But I've been trading for 20 plus years. I love what I do. I don't drink it. I don't drink a lick of caffeine, and this is just what the markets have done for me for the last 2 decades. I can literally talk about the markets, what seems like every single day, all hours of the day. But I will say that my transition from like a currency fund, running funds for 24/7, 5.5 days a week, compared to an opening bell, closing bell, like this is child's play. So I like this a lot more. All right. Good stuff. All right. So Stacy's posting the video link. So anyone that's wanting that one trade mastery, click that link and save that link. That is a video link to watch. And it's about 70 minutes, but it's a, trust content class, really good session. Just get good at one trade, right? And it's a bullish or it's a bearish. And I'll walk you through that in an hour. And that pairs well like fine wine and cheese or peanut butter and jelly. Pairs well if you like the one trade mastery, then I think you'll love practical options. And practical options is a $500 bonus course that I initially built for my nephews, and I've given to some clients along the way. And now it's included with an engineered options purchase. So if you're in my engineered options, I'm giving you my practical options course as a bonus. And also, if you're a masterclass or a VIP member of any of my other services, I would give you that practical options class as well. Okay. I have to miss the engineered options class today. Yep, it will be recorded. Yep, of course. So I'll try to get the link recorded as soon as possible. So we'll have class today at 2 p.m. Okay. So this is going to be engineered options, 2 p.m. Eastern time, masterclass today. And once that class concludes, I'm trying to think, we'll probably wrap around like 3:30 or so. And I'll get the recording up hopefully later today, like within a couple of hours. Usually Zoom like closes, processes, takes a couple hours, but I'll get the recording posted. Should be ready and available by tomorrow. And then also we're doing a encore masterclass Monday. Okay. Well, I don't want to say encore like it's a repeat, because my goal is, if you like what you get today from me in the Engineering Options Masterclass, then I think you're going to love what we talk about on Monday. All right. So if you're ready to go, deep dive into engineered options and see how powerful and flexible, but also how simple and straightforward it is. Okay. Look, what we are doing with engineered options is I'm trying to stack our weeks and stack our months to be profitable. All right. I want us to think about not just one trade to be profitable, but I want us to think about our levels of trades to be profitable. I think that we need to have levels in 2026. I think the markets can give us, case in point, look what happened last year, October 10th and November 20th. We had single day sell-offs of 3%. Okay. So we'll go Monday, bonus masterclass, and that will be at 11 a.m. Eastern time. Okay. Markets are closed. And we'll go a little deeper dive. Markets are closed on Monday, so we will jump into education. All right. But what I was saying is, I think we want to have those levels, because I think this is the type of year where the market could be just like choppy, volatile. I'll wait and see if the market kind of shows us a technical hand. If we get some strong pushing above 7,000 and there's some momentum there, great. We'll participate. But I think we need to have some levels on a weekly and monthly basis. Okay. Case in point, if you look at 2025 on a monthly basis, 1 month was bad. It was March, right? March was down like 5 or 6% as a whole. And then April was like a 15% pullback. So it was a terrible month. But if we have defense, we would have actually defended our way to a profit. So the market had a peak to trough of 20%, and we only would have lost in March on our monthly trades, because that was the 1 month that it was down in red. The big fat candle was red. But April was down in wick. November was down in wick. Everything May, June, July, August, September, even into October, all bullish. Even into November, it was a long wick to the south, and so getting filled on defense levels. So anyway, we'll talk about that in the masterclass, right? So what I want us to think of is total risk on the levels. So if I'm going to put in 1 to 2 trades or 1 to 3 trades, it's total risk that I want us to wrap our head around for this week's masterclasses. Okay. because my least favorite is going to be we're sitting at all-time highs with sentiment getting higher. We're year like 1 year sentiment highs right now. We're sitting near 7,000. The market's a little frothy. We're at all-time highs, which is great. I'm not saying we can't go higher, but that's why I asked the question: how many of you see the charts right now and think we're never going to pull back to that 50-period moving average? We're never going to pull back to the 100-period moving average. We will, and we'll do it probably this year. And so, we have some earnings season kicking off here. We'll see what happens, but we have to be prepared and flexible with engineered options to kind of level our way to some profits this year. And then once things get a little bit more clear, great. My favorite thing in 2026 would be if the market gives us a 5 to 10% pullback, we could be much more aggressive on the reflexive recovery. But when we're at all-time highs, all-time highs, all-time highs, all-time highs, all it takes is one ugly move. And then you're talking like a 3% single day sell-off. You're talking a 5 to 10% correction. I don't know what the catalyst is. I don't know why it would happen, but certainly it's in the cards for the market to do it. We've had multiple, for the last 10 plus years, we've had multiple 5 and 10% corrections. We've had 7, 20+% corrections in the last 10 years. That's a lot of volatility, folks. So we need to be prepared for that. Okay. All right. Stacy sharing link. I'll share it again before we go. Hey, Blake, let's go ahead and do this. Since I'm jumping into the class at 11 o'clock, I do want to get this out for everyone for engineered options. Since we do have a master class today, let's take a quick spot check on daily profit play. Right now, I'm just going to take the profit. I'm up 60, 70, 80 bucks. I'm going to take the profit right here. Let's see if I can get out of here for 11:40. Let's see here. Where are we at? We're at 61.51. Let me see. All right, I'm just going to keep the profit set. So right now it's up about 50, 60 bucks. If you want to take the profit, take the profit. That's a good win for daily profit play. I'm just debating if I want to get a little bit more out of this. We're trading at 61, 60. I mean, it's going back up towards our center price. This is good. I've only been in the trade for 20 minutes. So let me see if I can get let me get 55 bucks out of this thing. So 45. See if I can just carve out that $50 win. All right, let me try to bump this up to 50. All right, filled at 11.50. Daily profit play is in out for 50 bucks. So I'm doing a quick win. DPP update. Today's trade entry $12 credit. Close 11.50 debit. Grabbing the quick $50 winner. If you want to hang on to it longer, be my guest. I'm going to just get out. We don't typically take that type of trade, although I do think it's a good one, especially if the market's just like, all right, gap, stall, hang out at 60, 65. The longer you sit in that trade, the more your profit trap starts to fill up as time passes. Okay, where that trade becomes an issue is if we get a directional push down and it doesn't come back to 60, 65, it's no good. Okay, if it goes up to 75, 80, it's no good. So what you need for that trade that I just took and I took profit on was you need price to basically stay inside that window. Now, to be fair, it wouldn't surprise me if this trade, look, you're risking $300 here to make up to $1,200. And $1,200 will be better and better and better later in the day. So if you want to hang on to this trade just for fun, which nobody does, make a win. But if you want to, close out a partial profit and then let the rest run, look, if we came down here and then come back up to 60, 65 by noon or 1 o'clock, this trade's probably worth $300 to $400 a profit, right? If it goes, sideways, then it goes up a little bit, comes back down, it's worth $200 to $300 profit. So if it's in here later in the day, that profit trap still lets you run and it starts to fill up in real time where your risk is here and it just gets later in the day, a little profit, later in the day, a little profit, later in the day, a little profit. And eventually it looks like the iron fly trap. So anyway, just saying, don't be greedy. If you get, 50 to 100 bucks, take the profit, be happy. We have a nice winner. I'm always happy with that. Cool. Who got like the 1250 to 1270 fill? 1220 is great fill. 1215 is great fill. Who got like 1250 to 1270? Did you take the same trade I did? And if so, what's that trading for right now? If you got like a 1250 and it's trading for 1150, yeah, Larry, what are you doing on that trade right now? What's it trading for? You up $100? You up 100, $125 on that trade? Mark says, like the Iron Fly trade, $1 today, 8% win. Iron Condor, one to make one. Yep. Yep. Agree. Okay. Masterclass today, probably 90 minutes because we are going to have another one on Monday. So we'll go like 60 to 90 minutes today for engineered options. All right, Blake, let's do this, man. Let's fire up a engineered options session with Lance and I. If anyone is not in engineered options and you'd like to join me today from a masterclass at 2 p.m. Eastern time, now is a good chance to do it. There's lots to discuss, get you prepped and ready for our week-to-week, month-to-month trades. What I will be sharing today in class is our monthly setup. And my plan is let's get our levels, let's get our calculations. I have some bonus trades ready for the month, and I'm going to. Today's going to be like core strategy. Monday's going to be core plus bonus. I've got a bonus strategy I'd like to share with everybody on Monday. But today we're going to get into the core strategy, talk about our levels, get our kind of income grid plan. That's what I like to do with engineered options. And we just want to, I'm going to use it for setting proper expectations because at this market's all-time high with sentiment as high as it is, I'm not chasing highs without having a backup plan. I'm not chasing highs without having some type of protective levels. Okay. So I want to make sure like my engineered options by design is to give me basically, my participation trade as well as my defense trade. And that to me is like what I need going forward, because that way the market, if we have a down week, we can still break even. If we have a down week, we might even come out ahead. Right. And if we have more convincing that the market's going higher, then we can obviously just participate and take our single weekly trade. Okay. All right. So let's go ahead and fire that up here. I will hang out for the next 45, 50 minutes. I'll be live in the chat. So if you have any questions, feel free to type them in. I'll also be, updating on daily profit plays. Looking better or worse is now trading for 11.45, 11.50 again. If this gets down to like 11.20 or $11, it's just looking better. Like right now we're back up to 63. So, I mean, it is looking better. It just needs a little bit more time. So if this goes for another like 20 minutes or so, even 48 minutes at the top of the hour, you're probably going to get that, $100 or so out of the trade. Cool. All right. And before I go, I know Stacy was great at posting a link for me multiple times today. I will share that link for One Trade Mastery. I would encourage everyone to take a look at it. I'll also post it in Telegram. So, we have 300 people today. We got 2,400 people in Telegram. So let's post it. Let's go One Trade Mastery. There's the link for that. And also for engineered options. Blake, can you post that link for engineered options? If you'd like to jump into the 2:00 class today, we're going to run that live stream and engineered options today at 2 p.m. Eastern time. And I'm looking forward to that class, and also a bonus class on Monday when the markets are closed, so we can just focus exclusively on the education. So, all right, man, ready when you are, Blake. Let's see here. Or is Blake gone this morning? He's here, right? He's here. Okay. All right. While we get that transitioned over, let me get some questions here. Sean says, what's going on with FSLR today? We're talking, is that First Solar? I don't know. Look, I think everything energy is going to be good. Like everything energy could and should be good. I'm a little reluctant to say that oil is not going to go lower. I think that oil, could, as we, demand more and more of it, as we're, bringing things online. I think that oil prices could get into the low 50s. I think this Venezuela stuff caused a little bit of drama. I really think the spike in oil was because of Iran, not because of Venezuela. Like this spike up to the high 50s was because of Iran. If that situation, look at what happened today on price, right? We got up here to $62. It's already retreated. So if we're going to de-escalate Iran, I think this is where oil prices continue to have some pressure. All right. Replay this morning. So this session, sure, you can get these replays. I believe we're streaming this on youtube.com/slash financial wars in addition to these live sessions. So we always have these replays and timestamped. So you can check this out on youtube.com/slash financial wars. Let's see here. List is off to the gym. See you at 2:00. Excellent. Mark likes the fly. 1275. So Larry, your 1275 is break even right now? Really? You take the same legs I did? I thought you just got a better fill. Good stuff. All right. When will you close your unfilled this week? I probably won't have to do anything with them, Roy. If they're just unfilled, then they can just, automatically cancel by the broker. They just go unfilled. So I will say that if we cancel them, it's because we're taking profit on the position that we're participating in. So if I take profit this week, then I'll cancel the unfilled positions. There's no reason to have those out there exposed when I'm going to take profit. My job is done for the week. Make sense? Okay. All right. All right, Blake, when you're ready, let's fire this thing up. Lance and I will do a live streams here for one of our engineered options sessions. It is, look, it's open for the taking. You want to jump into class with me today at 2 p.m. Eastern time. It's going to be a great class. Monday, another bonus class. Today, what my incentive is, let's learn engineered options. Let's set expectations. And I've got some monthly bonus trades. If you like the foundational stuff, One Trade Mastery, check it out. I'll post that in my Telegram, but you have the link for it. That's a video link. And then if you're in engineered options, I'm giving a $500 bonus course alongside of it called Practical Options, just to get you more prerequisite foundation, like build that strong strategy foundation. You can think of this market in terms of making calculated bets. I want to trade the market up. I want to trade the market down. I want to trade the market sideways. Understanding, a couple of strategies will be great. Being great at one strategy is all you need, but I would say One Trade Mastery for the